Today we have Jesse Valdez with Farmers Insurance. We work together and Jesse is able to help a lot of my clients with their insurance needs. Thank you, Jesse, for being on the show. I know you're involved with Farmers Insurance and today's wild insurance market, dealing with all the increases in premiums and a lot of the carriers going out of business. So what's your take? What's going on in the insurance market?
Hey, Cam, thank you for having me here today. It's a pleasure. Thank you for the invitation. Oh, yeah, it's a huge disruption going on right now on the personal line side and the commercial side. I've drifted away from the personal lines to so disrupted and wild. Focused back on commercial, which is like that bread and butter. We're seeing a lot of carriers stepping out in California just because they're not profiting. At the end of the day, it's not profiting. Too much claims going on. A lot of lawsuits. It's just a combination of things we're seeing, Cam. But the main drivers are that bunch of claims, bunch of big lawsuits.
So how are you taking these phone calls with clients calling you? My premium's gone up. Can you change my carrier? And I remember you have mentioned that Farmers, if you're not able to place with Farmers, you're able to place with another brokerage.
That's correct. That's a great privilege you have as a Farmers agent. Whatever Farmers does not accept or declines, we're able to go outside and shop it around with different carriers, unlike other bigger agents that are fully captive. We're like a hybrid captive. So we do have our relationships, our carriers that we do place our homes with. Home insurance right now, guys, it's a big disruption. Farmers is capped at 7,000 policies for the whole state of California. When that cap started, it lasted about 3 weeks. Then it started dwindling into about 10 to 14 days. Last month, it lasted 3 days. 3 days, guys, for home insurance for farmers. Yesterday was the first, so we're on our second day now. I haven't got an email where the cap is at, but it's getting really wild out there.
So on the commercial side, what are you seeing? Do you seeing a lot of your clients or new clients getting dropped by the existing carriers? Their premiums being increased? What's going on?
On the commercial side, I do focus a lot on real estate, plazas and habitation apartment buildings. A lot of carriers are no longer taking buildings built prior to 1990, right? 1990 is huge. That means these buildings have to be 30 years or newer. The majority of these buildings were built in the late 60s to early 70s. So even some carriers are Farmers exclusively. We're going to 1973. Anything prior to 1973, Farmers is an automatic decline. Breaking news, we just started yesterday, actually, November 1st, a big moratorium with Farmers. We're no longer writing commercial property, real estate, or habitational apartment buildings at this time, restaurants as well. So it was great that I started making these relationships with other brokerages, these big, what they're called GAs, and they have other carriers that are coming into place. But even them, they want building updates. They want the main driving force behind that, Cam, are they're seeing these electrical panels. If your electrical panel is outdated, they're not going to insure that building. It's really simple. So we might get you coverage, but we got to get an electrician in there right away to update that stuff.
Makes sense. What's your recommendation for individuals or trusts that own many properties, based on what's going on in the market? The disruption they're seeing. What is your recommendation?
My recommendation is let's try to focus on those updates. Right? We know that's a big driving force for income and their businesses. Let's focus on updates. Let's update these HVAC systems, these electrical panels, these roofs, right? So your main driving force is going to be your roofs, your electrical, and your HVAC systems. What I get to see, because I do have some properties in the city where they have bars in their windows, right? We got to make sure those bars are self-unlatching bars, right? That the tenant could go and unlatch in case of emergency, earthquake or fire, they could jump out through that window. So that's a big thing that we also got to consider. So we recommend that to our clients as well.
We just closed a deal together for a particular client of mine that was buying an owner-user building out in Temecula.
Correct.
And I had a very good experience with you with a client. The client was very happy, and we had the opportunity to insure more of his other properties. Mm-hmm. Yeah. How do you work with brokers? I mean, what is your take?
My take is I try to fill out, always try to deliver, right? I don't try to over promise. I try to fill out the situation for a current client. It was a little tricky because he's going to build it out into a restaurant, another restaurant, right? and it's going to be vacant. So that's another big red flag for these carriers that do not like to see vacant properties, because we know the situations in California going now with the squatting and the homeless going around, and they see a vacant building, they might go in there and post up. So that was a little tricky, but we have our specific carriers that do cater to that, and they're real lenient. And as long as you're transparent and you work in good faith with the carrier saying, okay, he's going to build that into a restaurant, we'll give them a 60-day update. Okay, they're almost done with the kitchen. Okay, they're updated with the electrical. These carriers will carry that policy all along, right? I did do a big apartment building in Thousand Oaks, huge, and about 180 units. And it had some recommendations. I walked it with the inspector, and we did it. We actually did it with Farmers. Farmers is pretty more stricter than your other carriers because we are an admitted carrier, correct? So we did it. And I just actually got a email last week from the underwriter where he just wanted updates of what's going on. You know, simple stuff, update the pools. You have to label how deep the pools are, the railings on the apartment buildings. So as long as the client acts in good faith, these insurance carriers will work with you.
What is the difference between admitted and non-admitted carrier?
So admitted and non-admitted, right? We always get that, and you'll see it in the price difference. But now you're seeing everything level out. Unfortunately, the admitted is someone that's responsible to submit all your financial records to the state of California, right? State of California is heavily regulated. Department of Insurance heavily regulated, which kind of caused where we're at right now. But that's another discussion for the next show, Cam. And then non-admitted is a company that doesn't have to submit their financial records to the state of California. If there's a huge, massive claim, say here in this local area, Calabasas, and this carrier insures 100 homes and they're losing $100 million, they could file insolvency, and you can't go after them. The state can't go after them or anything. So it's pretty serious. So when I write those type of policies as the agent, they're having me sign all these forms, right? It's not just, okay, just sell this policy. I have to also act in good faith and make sure that I'm submitting these documents. I shop the policy, I shop the property around to everyone, and then they'll actually want, okay, who did you call? Who was the company? So they'll follow up on that. So they know it's serious. It's called an SL2 form that an agent has to fill out every time for the non-admitted carriers. And I tell the client, it says it on your policy in big black bold letters, non-admitted for the same reason, right?
Thank you for that information, Jesse. So tell everybody about a little bit your background, how you started in the industry, what you did prior, also how your wife is involved with your business.
Sure, Cam. Everyone always tell a little story. It's I come from 15 years in law enforcement. I started at 22 years old with LAPD. I left at 30 years old, right in my prime as a supervisor. Huge decision to walk away from full pension benefits and everything. But you know what, Cam? Deep down inside, I knew I was capable of much more. I had a different calling. I've been with my wife for about 15 years, and she's been with Farmers since she was 16 as an intern. And I used to go to all the conventions with her and everything, meet with these other agents, and I kind of like that. And I like that the lifestyle they were living, and they would disclose to me how much money they're making, and I was like, wow. So I was always behind my wife, supporting her, and they would tell me, you know what, you be the rock, and you'll see you guys develop as well. And then she started her Scratch agency, which is an agency from scratch, and build that up to like 300 clients, which is very hard because like any business, you need a stream of income to invest back into it, pay your bills, pay your employees. So the opportunity came in 2018 to purchase 2 books of business from Farmers. And I tell everyone, this was a vision we had 10 years prior. It's not something that is just jump and get into an insurance. It's a vision, right? You always have to have that vision or that dream and follow it. And I ended up getting licensed because I was getting all the perks just because of my background. And of course, you need liquid assets. I had my deferred comp, my pension, all that. They look at all that because you need at least a minimum of $50,000 in liquid assets to purchase a book of business with Farmers. So fortunately, we had that. And we jumped into the business together. It was tough. It's tough going to business with your wife. A lot of people are like, but I don't know how you do it. At the end, now that I look at it a little bit over 5 years, Cam, she's my best business partner because when you have another business partner, if he wants to turn left and you want to turn right, what happens, right? That drift. Correct. So here, if I go right, she's going to go right, like it or not. If she goes left, I'm going to have to go left too. But as a team, we have our best interests as a business. And we've been abundantly blessed. Out of 45 agencies, we're number 3. And the reason we're number 3 is because the top 2 agencies have 12 staff or more. And with us, it's 3. I recently hired 2 more. But at those 2 years, this past 2 years, it was just 3 of us. And we put in some amazing numbers. But it's been an amazing ride, right? I absolutely tell you, like I was telling you earlier, I'm grateful just for the opportunity to have my office open doors and not do that law enforcement career anymore. I like to be home. I like to be with my kids. I have 2 little baby boys, be off for the holidays, be off for the weekends. I did that for many years. So I'm absolutely thankful every day. Even though this disruption we have going on right now, I stay positive. Like I told you earlier, disruption means there's opportunity. There's a lot of opportunity out there.
With today's competitive market, and obviously there's a lot of people who have been in the industry 30, 40 years, have big books of businesses. How do you compete with them? How do you get new business?
I always swim across the river, not with the river. I went upstream. I did do a lot of internet leads. Right, I jumped into that in 2020 when COVID hit. It was scary times, right? We didn't know what was going to happen because it was just so new. The world has never gone through something like that, and nobody's going to walk into your office. What's going to happen with the lenders, the realtors, the mortgage LOs, loan officers? We're getting a lot of referrals from those loan officers, and COVID hit and just dropped everything. And then I keep getting emails and calls about internet leads, and then I was like, you know what? How come these internet lead companies are still in business? Someone has to be closing them. They have to have something positive. So I attended some seminars and conferences, and I would hear these older agents, oh, you have to have your systems in place. I'm so freaking, I was like, what freaking system? Where do I buy this system, right? But what I realized is it's your own marketing campaign, your own approach of how you're going to approach your clients. That's the system, and how you retouch bases with them and follow up with them. So I was like, oh, that's the freaking system they were talking about. Of course, nobody wanted to spill their secrets about how they have their system because of the competitiveness. So I jumped into the internet leads, and I think the average closed internet lead was like 5%. We were closing about 15. And I would just quote and send the email, and that's it. I was being real thick-skinned because a lot of people look at it like, oh, you're just losing money. How come you're not calling the client? Well, everyone does that. And I did that in the beginning, and these people would hang up on me, man. I was like cold calling. So I did that. And then I got connected with this other startup email marketing commercial, right? And I started that in 2021. And it was just an email blast going out to 1,000 property owners, commercial property owners, and it just took off on that. I just created so many contacts with that. And to this day, I just landed the one I was telling you about earlier, just from an email. It's amazing. Right. And these older agents are not going to do that. I don't bash them because I don't have social media. These guys don't reinvent the wheel. I kind of follow that too. Why reinvent the wheel if it still works? If you're good at your job, you get your referrals, right? Like you get tons of referrals, and if you stand out. But I had to get into that marketing for sure, and that's what everybody's telling me. You're going to be ahead of the curve. You're going to be ahead of the curve when this thing hits the fan, and it's hit the fan. And we're thankful that we are ahead of that curve.
I'm going to hit on the subject again of, if there's these clients who have, been in the industry of, let's say in the commercial real estate, they own multiple properties. It's coming to a time where a lot of their policies are increasing in premium, and they're not used to it, especially in the last 2 or 3 years. I've had properties and the premiums have gone up, but it's compared to, people who has like 40, 50 shopping centers. And there are certain carriers that, as you said, are leaving the state and they're dropping these shopping centers. How are you dealing with that? Maybe if they call you and they say, okay, I have 2 weeks, 3 weeks, I need a new policy. How do you go about that?
Those are the policies or the clients we call the hot ones. They're intense, right? Because not only do we have to explain to what's going on, we have to shop it to them, so present them a proposal to see, look, this is what you're paying, this is what's available now. And sometimes the fair plan, the California fair plan is out there as well, right? I had to write some commercial properties with fair plan because they're getting a renewal at $81,000. And of course, like you said, they're in shock. Like last year it was $25,000, now it's $81,000. So with the fair plan, and I have to write a difference in condition with a liability policy separately. So I did that a few times, and I disclosed what the fair plan's about. But they went from paying, the renewal being $81,000 to now with the fair plan and a separate liability policy is $40,000. So I'm saving them half that cost. Their current broker is not going to do that for them, right? Because they want to sell that big 80,000. But we're talking about on the long run, right? We got to keep that client happy and the renewal, right? Because we live off our renewals. So we have to approach them like this is another option. It's not the best option, but financially, you're going to save 40 grand. You could probably pay 3 other properties with this 40,000 you're saving. So we have to come at them with different ideas. That's for sure.
And you're able to write California fair play on commercial properties as well?
Correct. That just came out last week. I got the email starting December 1st. They just bumped up the commercial property coverage to 20 million. And we're at 5.6. So there are some properties out there I'm working right now where they're giving us some leeway that we don't have to submit pictures and applications to bump up that coverage, because we do have max limits of 5.6 million on some of these big apartment buildings. And we have an excess property coverage of another million on top of that or 2 million because it's not enough coverage. But now with 20 million, it just changes up a lot, right? I get why they went and increased that. I did have a big HOA in Castaic. It was about 200 units and they got non-renewed and they were with farmers. And I just got referred just through a friend that was on the board, and another farmer's agent was on top of it, and they got non-renewed. They were paying 50 grand. And when they had to get a new policy, it was 500,000, Cam.
Wow.
From 50,000 to 500,000. So they had to assess new HOA, right? The new assessment through the HOA, ask for an extra $500 to cover. It's just, I feel bad. I sympathize for those people, because imagine if we were living there, and that we get that news, right? So, yeah, it's tough market.
Very tough.
Yeah.
Can you hit on the subject of umbrella insurance for commercial property owners, and how, what's the benefits and not benefits and so forth?
Good. Yeah, for sure, Cam. A lot of things are changing now, right? It's where back in the day you would have all these policies on what's called a blanket policy to save money, because say you have 5 buildings and you insure them on that blanket, you're only paying liability for that blanket, not for each individual building, right? But now the things are changing where if you have a claim on building 1, all these other buildings are going to get hit with it too, because it's part of that main policy. So now, as a newer agent, those times were good, good time saving. But now with the market and the restrictions, we're advising everybody separate those buildings individually and get a separate umbrella for them, right? Another umbrella, you could go up to 1 million to 10 million and a separate liability insurance, right? People are going to try to do a lawsuit if you own a big commercial plaza. I saw a loss runs, and they try to file a lawsuit on the owner of that plaza because there was something that went on, but I guess the client got hit by a car purposely, intentionally. Something hit the fan there, some crime, some criminal element. The guy got hit by a car purposely and he lost his leg. So they're trying to sue that plaza. But that wasn't the owner's fault. That was a criminal intention, crime occurred there. But as you can see, that is going to go towards the owner because he owned that property. It happened on the property. And like, oh, these owners have money. These attorneys like, oh, we're going to try to get money out of somewhere here. Someone's going to pay for a client. But at the end of the day, it's going to be that person that probably has to end up paying restitution. Right. But you see that, right? So that's a big thing that we got to make sure we separate these properties, write a separate umbrella for everyone. And if you want $5 million, I have a client I was telling you, he has his plazas and he has a $5 million coverage on every single one of his plazas. He makes sure everything's covered. He doesn't want to, open up any exposures for himself.
Can you explain a little bit further on how it works on the umbrella, what it covers, what's the excess it covers?
Okay. So someone's at the property and I'm trying to create something. Okay, and then a piece of the towel from the roof, a towel roof like the one across the building here, is walking the client's going by, and it falls on this client's head, and he happens to be a real prominent attorney or doctor or something, and he's out of work for 2 or 3 years, loss of income. So what's going to happen is he's going to get an attorney. He's going to go after that liability limit. Right? It's going to be $1 million. That's the basic commercial liability limit, $1 million. And then that $1 million is going to be exhausted. So what then? It comes out of the client's pocket? Most likely. That's when you go after the client or put a lien or put a judgment. They're trying to get their money. The gentleman, too, put yourself in his shoes. You're going to want to get your money. You have a family to support. You got bills to pay, too. So it's a real unfortunate event. Yeah, the towel came loose and cracked him on the head. And now, He's going through all this physical therapy, get back to normal. But someone's had to cover that gentleman's income. He's a family breadwinner. So that's where, once those $1 million are exhausted, that's when your umbrella liability comes in, the other $1 million or $2 million or $3 million. So with $2 million, the attorney's, it's going to be an ongoing case, but here's the $2 million, give it to your client, and we're exhausted after that. 95% of the time, the client is going to take $2 million, even $1 million, but it just depends on the severity of the claim. But we're in California, $1 million is nothing these days, right? Unfortunately, after taxes, some of these claims are they're not tax free. You have to report them on W-9s or 1099s, or depending how the case is settled. But that's how an umbrella comes into place. When those $1 million are exhausted, the other $1 million come into play in your umbrella. Yeah, you have a $2 million aggregate. You've probably seen that on the certificates. That's for an aggregate for something that occurs that same year again. Maybe another tile falls on another person. So yeah, that's going to be covered for another $1 million. But after that, that's it.
That year.
Yeah, for that year.
And how about for the umbrella insurance? Does it cover it each time?
Yes. For each that's why it's called each occurrence. For each occurrence in the aggregate limit. So it's good to have an agent to explain that stuff to you, because you have a lot of exposure, especially you're dealing with huge traffic volumes on these plazas, these retail plazas.
Last year, based on all the policies you've written for these shopping centers, office buildings, what's the number one claim you're seeing?
A slip and fall. I do a lot of CVS, Smart and Final locations, Rite Aids, and they happen inside the buildings. Our clients own the buildings, and they have lease agreements with the shopping center. So they'll try to come after our client first, and then they'll try to go after the business liability, and then that's where the insurance get involved. Sometimes our policy will pay out, and then they'll subrogate after CVS's policy or Smart and Finals and try to get the money from them. Who was liable? Who didn't mop up aisle 9? Right? Is that one of your employees' fault for not mopping up aisle 9? Or is the tile, or there was a crack on the floor? Okay, that's our client's fault because the building upgrades, the building's deteriorating, and nobody reported. So there's a lot behind those claims, but yeah, that's the number one. And I think that's been the trend for many years. It's a slip and fall in these shopping centers. Right. Number two, you'll be surprised, is the ADA's compliance. If your building is not ADA compliant, right, because of the American Disabilities Act, then there's people out there that are on wheelchairs, and they go into your restroom. If you don't have the bars, they'll go in and file a lawsuit for not being compliant for ADAs. There's a certain individual out there. He's known famously in LA through many insurance companies that's what he goes around doing, himself and his attorney, his teams. Suing people that their buildings or their businesses are not ADA compliant. Yeah, so there's a lot of information to know. So, but I think disclosing all this to our client makes us a little bit on top, makes us more transparent. We're not rushing. We're not just about to sell. Like I tell you, we want to keep this client on with us for the many years to come. We're young. I tell you that all the time. We're young, and we expect to be in this business for the next 30 years, hopefully.
What's your advice for individuals that have many different types of commercial properties? What's your number of advice to them?
To separate them, right? To separate them. Had actually a client call me where she has restaurants and apartment buildings and Starbucks and a bunch of different types of properties all in one policy, and she was just so upset that it was so much money. And I told her my advice and where you're going wrong is your restaurants need to be on this one, your apartment buildings on this one, your retail plazas on this one, and your other small businesses on this one. The days of bunching up everything together to save money is not going to work no more. These carriers are not going to take that. Each exposure carries its own different risk, right? An apartment building, different tenant risk. Retail plaza, different risk because of the traffic. Restaurant, whole different risk, right? So she liked what I told her. She was hearing me out. So she's going to give me an opportunity later next year to quote those properties.
How often do clients review their insurance policies for their limits and so forth? And what is your recommendation for them?
Every year, actually. Every year, the clients that we have, they have their team of insurance people. and they always want their updates, and some clients sell the parcels within these plazas and things like that. So they're always updating their policies. So it's not just selling the policy, it's servicing the policy. The service is what's going to keep you busy, which is a good thing. It's part of the business. So they review their policies sometimes twice a year. It depends on the property management company as well, but they like to get their renewals and like to review it and go sometimes, building by building, door by door. All right, a big credit right now is if your building's sprinklered, you're going to get a big credit right now. A lot of these carriers want these buildings sprinklered, even though the fire likelihood is really low. Still, nobody wants to take a $3 million loss or $1 million loss these days. Absolutely not.
Thank you, Jesse, for coming on the show. We appreciate your time. Thank you for all the advice.
Sure, Cam. Thank you for having me. I know we could go on and on, 2 hours, 3 hours, maybe talking insurance, but I love the questions. Hopefully, your audience is able to absorb some of those questions, and, you could give them my number. We'll put some contact info soon. Thank you, Cam.
Thank you for watching. If you enjoyed this episode, please give us a thumbs up, subscribe, share any questions or comments in the comments below, and follow us on social media. I look forward to seeing you next time.